Hi everybody, this is Todd with our daily video. Hope you're having a great day today. Hope your week has went well. It's the end of the week and we're coming to the weekend where we want to be careful with the trades that we have. Make sure that you have your stop losses in and make sure that you're comfortable with holding that position over the weekend. As you know, regardless of what you trade, whenever we hold positions over the weekend, we have the possibility of the markets becoming more volatile at the open and causing things to move against us and even past where we might think an appropriate stop loss level might be. Today we're going to illustrate a few things. First thing I want to talk about is this concept of gaps, and I'm going to talk about how things can move against us negatively. So on Friday, if we're looking at, and it doesn't really matter what we're talking about here, but on Friday, let's say that we're trading something and it is at a certain price. We have a stop loss set in, assuming that we're long, meaning we've bought something here, the buy, and we think it's going to go up. So we place our stop loss a certain distance based off of the rules that we're following below that entry price, assuming that if it goes down to here, we're going to be protected and we're going to get out of our position. Now, what happens is sometimes between Friday and the market open, we have something called a gap. Just because it gaps, in this case we're talking about it gaps down to this lower level. So if the price gaps down, and we'll say that this is the open after the weekend, because our stop loss is set here, but the market opens down here, what that tells us is that we're going to get filled at the open price down here, not at our stop loss price. And for a lot of people, that can be a difficult situation to handle, because if we have decided that we're going to risk in our stop loss 2% of our account, and this gaps down 3 times what we were anticipating, and we get stopped out on the open from a gap down, now we're looking at 6% of our account, which is really an unacceptable amount. Now, this type of gap, or this big of a gap, doesn't happen all the time, but it's certainly a possibility out there. And with the markets the way that they are right now, with the volatility that we're seeing, the gapping of the markets tend to be a little more frequent. Now, the reverse would be true if we were short and it gapped up against us. So sometimes we get and have a false sense of security when it comes to our stop losses being put in place. Sometimes those stop losses are fantastic and can protect us, but in the case of a gap, we need to be very careful, because we can get fooled in thinking that nothing is going to happen here. So keep that in mind. Now, the other thing that I wanted to talk about in relationship to the simple trading method, and we're going to just look at a brief example here of placing our stop losses. But if we're trading something and we're seeing it move up and we get it to pull back, we're looking for that pull back down to an area of support. And we need to identify where that might be. And then we're looking at getting in as it moves above, in this case, the HH3 for an uptrend. We're going to put our stop below the most recent low. Now, we can use this area here, and we could say I'm going to put my stop loss right here. If this is too tight, meaning if it's too close to the price that we are looking at getting into, we may consider going back to this next level. Now, remember that depending upon where our stop loss is placed, and depending upon what our risk amount is, will determine what our position size is going to be. So if my stop loss is here, and let's say I enter right here, put an E for enter, I've got a very small stop loss, which means that my position size is going to be bigger. If I have my stop loss down here, my position size is going to be larger because this stop loss is further away. I mean, it's going to be smaller on here. So the smaller the stop loss, the bigger the position size. The bigger the stop loss, the smaller the position size. The risk in these, whether we're a tight stop loss or a wide stop loss, is going to be the same, because we're going to risk a maximum of 2% regardless of where our stop loss is. If our stop loss was down here, our risk is still going to be a maximum of 2%. So that's kind of what I wanted to talk about today, is to consider gaps and look at where we might place our stop losses in relationship to our entry into the simple trading method, reminding us that our risk is the same. If we have a little bit wider stop loss, we're going to be stopped out less frequently and maybe giving ourselves a little more time for the market to move in the direction that we want it to. So if you have questions about that, let me know. Be careful this weekend and make sure that your positions are where you would like them. And if you have questions about anything, we will be back on Monday to take a look at what's going on in the markets. So until then, have a great weekend, and we'll talk to you soon.